These are dividend-paying stocks over the past 5 years, and these are growth stocks over the past 5 years. If you want to make money from your investments, which look better to you? Dividends are presented as an easy option to collect passive income checks, but in reality, you need hundreds of thousands of dollars invested to generate meaningful income. And I just don't know why more people aren't talking about this. So in this video, I'm going to show you how to avoid being deceived by dividends and what to focus on instead for growth and accessible income. Just to make sure we're on the same page, you need to understand the difference between growth stocks and dividend-paying stocks. Stocks from companies that pay dividends are typically known as value stocks. They're well established and more focused on maintaining what they've built versus growing massively. Since their focus isn't on growth, they take a portion of their profit and return that to people that own their stock to thank them or incentivize them for holding onto their stock. On the other hand, growth companies will take their profits and reinvest them back into the company so they can expand and grow. As the stock owner, your incentive for keeping the stock is the growth that it offers. Based on these differences, if you're thinking like an investor, and I heard this from a Warren Buffett interview at some point, and it really stuck with me. He said, and I'm paraphrasing here, but he said, why would you want a major corporation that you're investing money into to turn around and give that money back to you instead of using that money to provide you with more exponential growth than you could get on your own from the cash that they give you, especially when many people reinvest the dividend anyway, making it completely pointless, which we'll get into in just a bit. But let's take a closer look at past performance of these two types of stocks.
To give us a frame of reference, starting out, I entered the S&P 500, which is a basket of 500 of America's largest companies lumped together. It has both dividend and growth stocks within it. It's the dark blue line, and it pays a dividend of 1.64%. Verizon's the yellow, down 22% in the last 5 years, and it pays 6.98%. Walgreens is the teal line, down 50%, paying a dividend of 6%. You could compare stocks side by side by clicking this button, add comparison, and then we're going to add in now a couple of growth stocks. Apple pays 0.55%, so practically nothing, and look at this incredible growth, 261%. Microsoft, same thing, it's the purple line. It practically pays nothing at 0.89%, but look at this incredible growth. Now we'll add in T-Mobile since we have Verizon. This doesn't pay any dividend at all, and look at this growth, 146%.
Now, just looking at a few examples, you can see the major pitfalls of focusing exclusively on dividends. If a stock's paying a 6% dividend, but then drops in value by 30%, that dividend does not make you feel better about your loss. So take note when a dividend seems unusually high, I'd start to question things around 4 or 5%, and definitely if it's higher than that. This is a huge red flag that something's up with the company and they're likely compensating you for taking on a high amount of risk. Dividends are often portrayed as a guaranteed return, but that just isn't the case. Companies have the freedom to cut their dividend anytime things aren't going well for them, or if they're in a pinch and they need that extra cash. If you're looking for passive income, does it really matter if it comes from dividend or growth of stocks? My guess is you're searching for dividends because you don't yet understand how to take income from growth stocks or the benefit of doing so. So let's get into that. Logistically, taking income from a dividend stock or fund is fairly straightforward in that they pay a certain amount based on how much you own of the position every quarter. That money is deposited into your account by the company and you're free to take it and spend it however you want. To get income from growth stocks, you simply trim off some of the growth by selling a portion of the stock. You can do this as often as you'd like income, but at least wait until there is growth so you're not eroding the principal balance. Many firms allow you to sell portions of your investment using fractional shares, so you just have to be with a firm that does offer that option so you can trim off what you want and leave the rest to grow. Now let's get into some numbers. Let's say you want $1,000 per month in passive income from your investments. If you receive a 5% dividend, you'd need $240,000 invested to generate that. If, on the other hand, you used growth investments and received a 10% return, which by the way, is the average annual return historically of the stock market over the past 100 years, then you would only need $100,000 versus the $240,000 to generate that same $1,000. This strategy makes generating passive income more likely to be attainable early in life versus waiting until you've accumulated a very large portfolio later. When it comes to using growth for income instead of dividends, I'm not sure why people are so hesitant to sell sell any of their investments, but it's really not a big deal. The downside is that you're taking what could compound and grow for your future, but that same thing goes for taking a dividend that could be reinvested. Also, if you're like my husband and I, you establish a portion of your investments for your retirement and another portion to draw money from anytime there's growth and you'd like some additional income. And if you only take a portion of the growth that generates, you can still have compounding growth over time. The other logistical part of this is that the investments that you're selling need to be in a taxable brokerage account versus a retirement account if you're under the age of 59 and a half, so you don't have a penalty for taking the funds out of the account. This same thing applies to taking dividend income, so take a look at this video next so you know where to build your passive income stream.